Stock market crashes feel terrifying and they are inevitable. The news goes crazy, social media panics, and everyone acts like it's the end of the world. But here's the truth that most people don't know. Some of the biggest wealth transfers in history happen during market crashes. While most people pull out their money, freeze it up, or panic sell their positions, disciplined investors, who are long term investors and understand how the game works, quietly build life changing wealth. Today, I'm going to break down exactly how to make money during a market crash, not by timing the market, but by using strategic approaches that turn chaos into opportunity. Now, before we talk strategy, we need to redefine what a market crash actually represents. Most people see a crash as danger, but long term investors see it as a temporary fire sale of valuable stocks. A stock market crash is a sudden, severe, or rapid drop in stock prices across a major market, often exceeding 10 to 20% losses in a short period of time due to widespread panic selling. Stock market crashes are characterized by investor panic and herd mentality. The fundamentals of powerful companies don't instantly disappear just because a stock market crash happens. Businesses will still sell products, people will still work, and cash still flows. Prices fall not because value disappears, but because emotions take over. And historically, every single crash, every single one of them, has eventually recovered and gone on to new heights. So the question isn't, how do I avoid a crash? The real question is, how do I position myself to take advantage of it? That mindset shift is the beginning of your wealth building advantage. The number one rule is, don't panic sell out of your positions. The fastest way to lose money during a crash is to sell out of fear. Most people panic because they see red numbers, not because they understand the value. When you panic sell, you're locking in losses that would have recovered if you just stayed in the market. And the moment that you stop reacting emotionally and start thinking long term, you're going to be ahead of most investors. The number two rule is just keep buying and keep dollar cost averaging into the market. One of the easiest and most powerful ways to make money during a stock market crash is simply to keep buying. Automate your investments, invest consistently, no matter what the market is doing. If it is at all time highs, keep investing. If it is at all time lows, keep investing. This method right here is called dollar cost averaging. Over time, this single habit can turn a volatile market into a massive opportunity. The people who make the most money, let's say after the 2008 crash or the 2020 crash, were the ones that continued to dollar cost average and bought all the way down and all the way up. They just kept investing in the market. It's simple, it's boring, and it works. Crashes expose which companies are strong and which ones are only popular when times were good. During downturns, great companies with strong balance sheets, good cash flows, and a good competitive advantage also get dragged down with everyone else. And that is your opportunity. Go look at like Apple, Microsoft, Google, any of just a foundational company like that. They'll drop like 20 or 40% during a market crash. And it's not because their businesses just failed overnight. It's because of the market crash fear. So that's when a disciplined investor would step in and dollar cost average into the market, and you're buying quality companies at a discount. Wealthy investors love crashes because they can scoop up elite companies at cheap prices. One of the best ways to make money during a crash is to prepare before it happens. This is why having a cash buffer or an opportunity fund is so powerful. You don't want all of your money in the market at all times, not because you're trying to time the market, but because crashes are inevitable. So if you had like say 5 to 10% of your net worth in cash, when that market drops, you could deploy all that cash and buy good investments at a lower cost. That preparation that you had will create advantages for you. Another way the wealthy protect and grow their money during crashes is through diversification. Not everything falls equally, and there's actually going to be some assets that perform better when the market is volatile. You could look at dividend, ETFs, bonds, even precious metals. Cash gives you an opportunity here as well. Let's say the real estate market crashed and you had cash at hand, you go buy a house at a cheaper discount. Diversification is an effective tool and it keeps you safe enough to stay in the game so you can benefit from the recovery. And here's the part that no one wants to admit. Market crashes transfer wealth from the impatient to the patient, from the emotional investors to the strategic investors. When you understand cycles and when you keep consistently investing, And when you buy companies that are on a fire sale, you're going to position yourself to come out of every crash stronger than before. The people who panic in downturns often end up buying back in later at much higher prices. The people who stay calm end up owning more shares, cheaper shares, and those shares explode in value during the market recovery. A market crash doesn't have to be something you fear. It can be something that builds your financial freedom. If you have a long-term mindset and you automate your investments, you stay disciplined through all the noise, you will do what most people never do. You'll make money while everyone else is panicking. Stock market crashes are opportunities. They're wealth building accelerators, and the investors who understand this are the ones that end up financially free. And that's all I got for this video. So if you found this video helpful, hit that subscribe button and leave a comment down below. Stay tuned for more personal finance topics as I play some nostalgic Call of Duty, and I'll see you guys in the next one.